Good morning, everybody. It's Lori White from the Greater Providence Chamber of Commerce, and welcome to today's episode of Chamber TV. We're on episode number 77, and we're thrilled today to be able to focus on a topic that has so many of us confused with lots of questions, lots of procedures, and that's the whole notion of the PPP forgiveness with the SBA lending program. So we have some experts with us today to walk us through the latest with PPP forgiveness and offer all of us some tips, some techniques, some ideas, some insights, and some precautionary measures, obviously, on how to comply with this federal program with the CARES Act. So I'd like to introduce David Fonts, and David is a partner with the accounting firm Shapiro here in Providence, and we really appreciate him taking the time today to be with us to talk about the program and to share his vast knowledge with members of the Chamber. So we're live today on Facebook, we're live on YouTube, and of course, this recording will be available later in our library for any of you that want to take a look. So without further ado, I will introduce our good friend, David Fonts. Let me start, David, by asking you a question that I always ask our guests as we start out, and that is, how are you doing? How is your family?
I'm doing well. My family is doing very well. So I'm knock on wood. Let's hope it keeps going.
Great. That's wonderful to hear. And I know you're in the office today and you're ready to share your insights with us. So let me turn it over to you, and I look forward to your presentation, and we'll be back afterwards to answer any questions that folks might have. So either put them in the chat box, or you can send them along via Facebook, and we will get all of your questions answered. So David, the floor is yours.
All right, thanks, Laurie. So welcome everybody to updates around the Paycheck Protection Program, also known as the PPP forgiveness. So first, we got to start off with the administrative stuff. This is a disclaimer, our standard disclaimer about the content on this. Once again, this is just for educational purposes as of now. If you have any questions or anything particular, you should reach out to your professionals, whether it's an attorney, accountant, or whatever professional you use. So let's start off with me. I'm David Fonts. I'm a partner at Shapiro. I've been with Shapiro since 2013, and you can see my contact information below. So there's my email and my phone number. So feel free to reach out to me as I go through this. If I don't answer your question during the seminar, feel free to give me a call or shoot me an email with any questions you have. I'll do my best to give you the best answer I can provide for your questions. So here's the agenda for today's presentation. First, we're going to start off what we are hearing around the PPP loan from a bank perspective and from other professionals in the field. Then we'll go over the PPP summary, basically a summary of the provisions of the PPP and some of the forgiveness things we've come across as we go through these applications now. Then finally, we're going to wrap up with how to account for loan forgiveness. So this may be a very important topic for many, especially with those that has certain compliance regulations in terms of when they file with a bank, if they have an audited financial review or compiled financial, how they have to present it and how it impacts really their filings with their regulatory bodies. So let's start off with what we're hearing. So loan forgiveness application will be submitted by borrowers to banks, not the SBA. And the process may differ from bank to bank. So what we're seeing with this is some banks are accepting applications, some banks are not accepting applications. Some banks are saying we got to wait till the end of your covered period. So, and I'll get into the covered period a little more, but you would have to either wait till the end of your 24 weeks or your 8-week period before you can submit. So every bank is slightly different. So it's important to, throughout this whole process, when you start this forgiveness process, is to be in touch with your bank and understand their process. Because unfortunately, every single bank has a different process. Most banks have indicated that they're going to submit application waves. So they might take your application, and that doesn't mean they're necessarily going to submit it the next day. Some may wait till they get a certain amount in a queue and to send it in. What basically gives them that option is basically the way the guidance is laid out is that your bank has a 60-day window to give you, basically, to review your loan forgiveness application. And within that 60 days, they have to render whether or not they're in agreement with the documentation you provided. Then the next step is in the process is your bank will kind of transmit your application to the SBA. Then the SBA has 90 days to kind of render a decision on forgiveness. So basically, there's a 150-day window at maximum that it would take before you get an answer on forgiveness. Keep in mind, as a caveat, throughout the whole PPP loan process, there's been tons of deadlines set and there's been tens of deadlines ignored. So we have to be mindful of that. We hope the 150-day window is true, but more than likely, it might take longer than 150 days to render forgiveness. Then the potential audit process. So there's been interim rules issued on what the audit process is going to look like. So as of now, the standard is essentially any loan above $2 million is subject to an SBA review. The way the process is going to work from the interim rules is the first level review would be by your bank. And the SBA was going to go through your bank for any other documentation requests that they have. So more than likely, they'll contact your bank saying, well, we're going to review this loan. Your bank will reach out to you to ask for additional information. So really, everything will be funneled through your bank. In some instances, the SBA may contact you directly, but that's not always going to be the case. So there's a process in place, and there's also an appeals process in place. If they come back and they deny forgiveness, there's a formalized process in terms of how you can appeal their decision. But keep in mind that $2 million threshold is very important because those loans are absolutely going to be looked at. But within the guidance, there's for anybody, the SBA can review the loan. Essentially, they have a 6-year window where the SBA can come back and look at your loan. So it's important for you to maintain documentation for a 6-year window. And this 6-year window really starts when loan forgiveness is granted. So the clock starts when you get loan forgiveness. You need to maintain the proper documentation for a 6-year window because the SBA can come back 2-3 years later and say, all right, show me your documentation. We're reviewing your loan. So it's very important that you have your documentation and you maintain your documentation. So one of the biggest, I think, certifications everybody made when they initially applied for these loans was that an eligible recipient applying for a PPP loan shall make a good faith certification that uncertainty of current economic conditions makes it necessary the loan request to support the ongoing operations of the eligible recipient. So basically, this is saying you need to prove that you had a need for this loan. And this is very important. I can't stress out how important it is. If you have a PPP loan, you need to be sure you document your position of need. So every borrower, every affiliate borrower should be prepared to support the need of the PPP loan with documentation. If you have questions on what satisfies current economic uncertainty, which makes the loan request necessary, I think it's very important that you consult your legal counsel, because this is probably going to be one of the first things that if you get selected for audit, that the SBA is going to look at. And the news around this has been the whole PPP loan program hasn't always been positive. There's a lot of allegations of fraud. There was a fraudulent loan in Rhode Island. So there's tons of stuff around this that if there's nothing else you can take away from this seminar, it's very important that you have document at the time that you requested a loan, a documentation of why you needed a loan. That's paramount. Everybody should have that and maintain that for the 6-year statutory window. All right, so now we're going to get into the PPP summary and revised loan forgiveness application. So there's been 2 iterations of the loan forgiveness application. First, it came out one version of application where there's only one type. Then they came out with 2 versions, basically an easy and a regular version, but we'll get more into that as we go through the slides. So let's get into the PPP summary. So payroll and non-payroll costs paid or incurred during the covered period are eligible for forgiveness. Incurred but not paid must be paid in the next regular billing cycle. So payroll costs, what are payroll costs? That's going to be cash compensation. That's going to be employer paid health insurance. It's going to be employer retirement contributions. And it'll be certain state and local taxes paid by the employer. So those all qualify as payroll costs. Non-payroll costs are going to be consistent of basically utilities, consists of rent and basically interest payments that are essentially backed by a mortgage, a personal or real property. So anything paid within your covered period, so that'd be an 8-week period or 24-week period, is eligible for forgiveness. And you get an extra period outside of that. So the next scheduled pay period or billing cycle, so if you have a next scheduled payroll, or your next scheduled utility bill, or your next scheduled rent payment, whatever it may be, you get a prorated portion of that. So say, for instance, your next pay period's outside of the window. It's a week outside of the window. And in that window, there's 4 days that were basically, from an accounting standpoint, incurred within your cycle. You get basically 4 out of the 5 days that you can include in your forgiveness application. Okay, so for employees who are not performing work but are still on the borrower's payroll costs are incurred based on the schedule established by the borrower, typically each day that the employee would have been performing the work. So if you're still paying somebody within your covered period, it still counts. As long as they're receiving compensation from you, it still counts. Even though they may not be working, but as long as you're still paying them within the period, it still counts. So bonus and hazard pay can be paid to employees, but not to owners, and it can't be above $100,000 threshold on an annual basis per pay period during the covered period. So if you're doing the 24 weeks, you can't pay any individual employee more than that $46,154 within your covered period. So that's going to either be that's going to really apply for the 24-week period, which I think most borrowers are opting to take. Wages paid to furlough employees are eligible. And this is absolutely important. 60% of your forgiveness amount must be used for payroll, no cliff. So you must, at least 60% has to be used for payroll to qualify for forgiveness. The other 40% can consist of the other 3 eligible categories, but it's absolutely paramount that payroll is driving it. And payroll is going to be, like I said before, it's going to be your cash compensation, the health insurance, the retirement plan contribution by the employer, and also it's going to consist of any state and local taxes paid by the employer. So the period to replace and restore full-time equivalent in salaries was extended. So what this speaks to is there's 2 ways basically that your forgiveness will be reduced. As long as you meet the 60-40 threshold, that's really the first hurdle in terms of 60% to payroll, 40% to non-payroll costs would be fine. The next threshold is that there's a measurement that you've maintained certain full-time equivalent employees within your covered period. So there's 2 look-back periods that you can look at to compare it to, but ultimately you would have to maintain the same amount of employees in the 2 periods, with some exceptions, which we'll get into later, to basically not receive any reduction in the loan. The other criteria is that as long as if you compare to the first quarter of 2020 to your covered period, as long as you didn't reduce anybody's salary by more than 25%, there's no reduction. So for instance, you could have reduced somebody's salary by 24%, you're not penalized for that. It's once you pass that 25% threshold, your forgiveness could be reduced based on those reductions. With that, they gave basically a safe harbor date. So initially, the safe harbor date was June 30th, and what that safe harbor date indicates is that you could restore their pay to a level that was to their normal level and restore and hire employees back by a certain date. So, for instance, you could go throughout your whole covered period. Then by the end of your covered period, if you brought employees back to the regular salary levels, if you brought employees back to their regular full-time equivalent accounts, it counts as a safe harbor. Then it basically ignores any reductions through that covered period. So that safe harbor date, to kind of give more flexibility, what was passed was the PPP Flexibility Act. It basically moved that safe harbor date to the end of the year. So that date was moved from June 30th to December 31st. So anybody who's looking for forgiveness, and if you did an initial calculation of forgiveness and you don't have full forgiveness because you haven't restored your full-time equivalent employees or you haven't restored salaries, you have up until the end of the year to do that. So if you're not in a 100% forgiveness position, you should wait until you get there to file. So that's one kind of recommendation we're giving, that make sure you're maximizing your forgiveness opportunities because you have flexibility in terms of, you have plenty of time to file your forgiveness application. So what still remains an option is your 8-week covered period. So that remains an option for borrowers to receive the PPP loan prior to June 5th. by election. So basically, if you had a loan, most people received their loans in that first wave. I know there's a mad dash. April, everybody wanted to get it in. But if you're in that first wave, you still have an option to use an 8-week period. If you think that gives you a better answer than using a 24-week period, it's up to you. But I still see most people going, well, would you want to use a 24-week period? If you're after that June 5th, you received your loan after the June 5th period, you don't have an option. You have to use a 24-week period. So borrowers may submit a forgiveness application prior to the end of their covered period. Say, for instance, you elected a 24-week period and you opted, say, by week 15, I've used all my funds and I want to apply for forgiveness for some reason. You don't want to go the full 24 weeks. You're allowed to do that. But if you do that, you have to account for things as if it was a 24-week period, specifically a reduction in individual salary. So if somebody was essentially salary was reduced during your covered period, you would basically extend that reduction over a 24-week period. So if I got to week 15, basically I would annualize that reduction over 24 weeks rather than just the 15 weeks. But for the most part, as a recommendation, people should wait until the full 24 weeks to apply forgiveness, unless you have a reason why, unless something's going to trigger not to. If you have an unexpected reduction in full-time equivalent employees or something along those lines. For the most part, individuals should wait for the full 24 weeks, but you do have the option to go before the end of the 24 weeks. So another thing that came out of the PPP Flexibility Act is it changes the loan maturity from 2 years to 5 years. But I think one thing that I guess gets lost with a lot of individuals is that this is not an automatic change. The only way it's an automatic change is if you received your loan after June 5th, no loan documents were executed. So basically all your loan agreements basically say it's a 5-year. If you don't receive forgiveness, it'll become a 5-year loan. Anybody before June 5th, all their loans are 2-year loans. So it's important to see, if you're not going to get full forgiveness, you should be reaching out to your lenders to kind of mutually agree to extend the loan to 5 years. It's not automatic. So the lender has to agree to extend your loan to a 5-year period. That's one of the changes of the Flexibility Act that was not automatic. All the other changes for the most part were automatic, but this was not an automatic change. So it's important that if you have the expectation that you think you have a 5-year loan on your books, that's not necessarily the case. It's very important that if you don't think you're getting full forgiveness and you want that 5-year window, reach out to your banks now. Don't wait for an answer on forgiveness. I would reach out to the banks now just to make sure that hurdle's already away. As I said before, the SBA will audit loans over $2 million based on original loan amounts. So that $2 million figure is each individual loan. But if you have affiliated loans, so if you're part of an affiliated group and you have a loan, say for $1.5 million, and a loan for a related company that you own another $500,000, they look at the total of the whole affiliated group. So if your whole affiliated group's above $2 million, all those loans are subject to an SBA review / audit. So keep in mind that if you have a bunch of small individual loans that all after $2 million, you're still subject to that. And it's just not, like I said before, it's just not $2 million loans. There's still a 6-year look back window. So it's very important. One thing I have to stress is it's very important to have all your documentation, maintain your documentation for a 6-year window, because within that 6-year window, you still can be looked at. So it's important that regardless of your loan size, have the documentation available and maintain it. And it's very important to do this now. It's hard to, I know it's not convenient, but the sooner you do it, have all your documentation, your economic need, all that ready, the better. Because you don't want to have to recreate the wheel if the SBA comes back to you 2 years later and you're trying to gather and get all this documentation. It's very important to have all the documentation, have it documented, clear, concise, make it easy to follow, and just have it and put it aside. Hopefully you never need it, but you're better safe than sorry. So some things that are prohibited. So you can't accelerate costs for employer contributions related to retirement benefits, health care premiums that are outside your covered period should not be included. So you can't kind of pack in those costs, like essentially prepaying a bunch of things that normally wouldn't be paid. So the alternative payroll cannot be used for non-payroll costs. So this was more of a big deal when it was an 8-week window you're looking at. So basically, the SBA came out and just said you can either use a covered period and alternative covered period. What the alternative covered period is, it basically starts on the first day of your first payroll after you receive the loan. So a regular covered period starts when day one when you receive the money. So if you receive the money on January 2nd, that's when your clock starts to use it. Basically your 8 or 24-week clock starts on that date. If you elect for the alternative covered pay period, basically your clock starts for only payroll costs. It starts the date of your next scheduled payroll. So say I received my loan on January 2nd, the next available date, essentially, your next available payroll, say my next first payroll after that date would be January 5th. My clock starts on January 5th for only payroll costs. All other costs are not included. So your utilities start on the date of disbursement. Your rent starts on the date of disbursement, and your applicable interest payments start on the date of disbursement. So it's all tied. So if you use alternative covered period, there's 2 dates you really got to track. You got to track your disbursement date in terms of the date you received the loan proceeds. Then you'll start basically the next day you'll look at would be the date of the first payroll after that date, because that starts your clock. So for the most part, most people will not need this if you're going to elect a 24-week period, because just the math of how it worked, you calculated your loan amount based on 2.5 months, and you have 24 months to spend it. So for the most part, you're not going to need this, but it's an option if you do. It's all facts and circumstances. Everybody's situation is different, so you should evaluate it and maximize it if it really applies to you. Another thing that came out is interest on unsecured credit is not eligible for forgiveness because it's not secured by real or personal property. So there's some gray in this. That the question I get is, what is interest on a mortgage? It relates to any debt that is essentially backed by real or personal property. So real property would be real estate, buildings. Personal property would be cars, copy machines, certain equipment that you use. But the question comes, one gray area that's not clear is that we're looking for clarification on is, what do you do when it comes to if you have a line of credit that's backed by all the assets of the company? Is it clear that it's secured by some real and personal property, but is it clear that that should be included? So there's a lot of gray. They said any unsecured credit is not included, but they didn't necessarily conclude on that, because that line of credit could be covering all assets, and the part of all assets are this real and personal property. So there's some still, and with this, just like everything else in these times, is everything's extremely fluid, right? We're living in a fluid time. Things are constantly changing. There's new guidance. There's new frequently asked questions issued throughout this whole process. For instance, there was and I'll get into this later, but there was a frequently asked question issued yesterday. So nothing in the tough part of the struggle, which we all are going through, is that everything is still so fluid. Nothing's set in stone. And there's a lot of pending issues and unanswered questions that, unfortunately, I don't think will be answered until maybe after the election, if that. So it's important that we do your best guess and be very conservative on how you approach things. And as far as interest, so interest on the loan starts accruing on the date of the loan disbursement. So as soon as you get that loan, basically the interest clock starts. Regardless of forgiveness, ultimately the interest may be forgiven, but basically that 1% interest, that annual interest, gets started the day you receive the loan. So that clock starts then. So the PP loan forgiveness application, so there's 2 versions. It's available on the SBA website. One of my, I guess, best practices is, since the situation is so fluid, everything's changing and constant guidance is coming across all the time, is if you have a PPP loan and you're still evaluating your forgiveness, one thing that you should do, at least on a daily basis, is go to this website. And I'll pull this website on a little later, towards the end of the presentation. I don't want to do it in the middle because I don't know what would happen tech-wise if I can't get back to the presentation, but I'll pull it up. But you'll see on this website, it lists anytime there's new guidance, it's posted on the Treasury website. It's posted down there. You'll see it, and I'll go through it so you can see in terms of how the guidance is presented. It shows it very clearly, so you can get up-to-date information if you just check once a day. That should be part of your morning, whatever your routine you want to do in the morning, afternoon. I recommend if you have a PPP loan, you should be checking this website once a day. And I'll get into that towards the end of the presentation. So as before, there's 2, when you go through the application, you have 2 cover period you can choose. You have an 8-week period or a 24-week period. It's up to you. If you're after June 5th, you have to use the 24-week period. If you're before June 5th, you can use either period. So as I said before, the cover period starts on the date of the loan disbursement. So when you receive that loan, that's when it starts. We talked about the alternative cover period. One thing that I didn't say is that it's available for anybody with a biweekly payroll or something less. So if you pay some biweekly or weekly, if you're on a bi-monthly or if you're on a monthly payroll, you can't use this alternative cover period. So it's important that if you want to use an alternative cover period, you have to be biweekly or less. So the forms allow for full, even if full-time reductions, if eligible costs are high enough to absorb the full-time reduction. So this is why we recommend that you use the full 24 weeks, because the way the forms, and this could change pending additional guidance, but essentially, if you submit more costs, the way that the calculation, the way that it works, if you use your funds through week, say all your funds were used through week 15, we recommend you go in the full 24 weeks and submit the full 24 weeks worth of costs, because when we fill out the form, it can absorb some of that full-time equivalent reduction. And once again, this is pending additional guidance. We need additional guidance from the SBA that covers this. Have 10 months from the end of the cover period to apply for forgiveness before the loan payment begins. So I can't stress this enough. So once your cover period ends, so for most people, if you received your loan in April, your cover period is going to end sometime in October. So you have 10 months from this month. So you have 10 months from October to submit your loan forgiveness application. I can't stress patience is a virtue. If we look back, hindsight's 2020. When the application first came out, it was a mad dash. Everybody applied because they were worried the funds were going to run out. Let's apply. We want to get our money. Let's get in there quick. But what ended up happening is that everybody who first applied didn't maximize the amount of loan that they could have received. Because after that first application window period, there was additional guidance issued that kind of clarified a lot of how you should calculate your available loan amount. And for most instances, most individuals were shortchanged on their loan amount. If they waited, they could have got a larger loan. And it ended up, the fund was depleted and it was replenished, but there was still money available until the end of the close of the application period in August. There's still plenty of money available if you still need a PPP loan to apply that went unused. So just learning from that situation, I think it's extremely important. Be patient with this loan forgiveness process. If you don't need to do loan forgiveness right away, I recommend waiting because they could be favorable. So some things that are getting bandied around, they could be more favorable guidance that, say, for instance, there's been discussions of forgiving certain loans below a certain amount automatically without you having to submit an application. There's some tax implications. So one thing to consider is, as things stand now, the IRS had made a ruling that basically made the PPP loan taxable. So the IRS came out and said, any forgiveness of debt income related to the PP loan would be non-taxable. However, any expenses paid through the PP loan are non-deductible. So that basically gets you to the same place that there's going to be a tax impact with this. And that's how things stand now. So Congress has come out and said, no, that wasn't the intent. This should have been a tax neutral. This is supposed to be tax neutral. There shouldn't be a negative tax impact on any of the borrowers. There's actually a bipartisan bill in Congress, but good luck. We don't think any movement's going to be on that bill until after the election, even if that. So I think I can't stress enough, if you can wait to apply for forgiveness, and everybody has different facts and circumstances around their loans, I would wait, just because it could be favorable guidance coming out, and also there could be a resolution to the tax issues around that. So it's important to be in contact with your professionals when it comes to loan forgiveness, because these are things that everybody should evaluate. From an accounting standpoint, if you have accounting considerations, you want to try to get forgiveness in the period because you want to match it against your forgiven expenses, there's reasons around that, but the AICPA, which I'll get into, is issue guidance that kind of gives you an option, that gives you a lot of options in terms of when you can recognize that loan forgiveness. Basically, in some machinations, you will be able to recognize it in this fiscal year, 2020, or you should be able to recognize it in 2021, depending on the accounting model that you choose. So you have some flexibility there. So do not have to include costs that you're not seeking reimbursement for. For example, you can choose only payroll costs if that achieves full forgiveness. So with that said, you don't have to submit everything. If you get there with just payroll costs, you can just submit payroll costs. You can just submit cash compensation. You don't have to include health. You don't have to include the other non-cash payroll costs. And you don't have to, if you can get there with payroll costs, you can just use payroll costs. Wherever the mindset is keep it simple. The simpler you can keep it, the easier it's going to be for your bank to review it and the SBA to review it. So you don't necessarily, if you don't need to submit your rent, if you don't need to submit your interest, and if you don't need to submit your utilities, you don't have to. If you get full forgiveness by just submitting payroll, just submit payroll. With this, just keeping it simple is the best course of action. So who's eligible for the easy form? I get this question a lot. So if you're a borrower and you're a self-employed individual, independent contractor, or sole proprietor who has no employees at the time of the PPP loan application and did not include any employee salaries, computations for the average monthly payroll in the borrower form, you can submit this because essentially you don't have to calculate reduction because you don't have any employees, so you couldn't reduce your full-time equivalent employees or you couldn't reduce their salaries. Option 2. So if you have annual salaries, hourly wage that were not reduced by more than 25%, so you didn't reduce anybody's pay by more than 25% during your covered period, and you didn't reduce the number of full-time equivalent employees, so basically you had no reductions, and this no reductions plus excused reductions. So there's certain safe harbors and provisions that will allow you to say if an employee was let go, you tried to bring them back and they didn't want to come back, that doesn't count against you. And I'll get into this a little more, but same thing, if somebody left voluntarily and you tried to rehire somebody in the same position, it doesn't count against you. So those individuals won't count against your reduction. So if you qualify for those 2 thresholds where you didn't reduce anybody more than 25%, and you have basically a full-time equivalent that is either the same or you have excused reasons why it should be the same, you qualify for the easy. Third option, so same thing, as I said before, more 25%, you didn't reduce anybody by more than 25%. The different piece of the second piece is that your business activity was limited. So for your full-time equivalent account, if your business activity was limited by the CDC, Human Services, any state agencies, basically saying that I wasn't able to operate because of restrictions by the federal or state government. Essentially, those restrictions that reduced your full-time equivalent doesn't go against you. It doesn't hurt you because you weren't able to fully operate. So say if you were in a business where they limited what you could, your capacity to a certain percentage, you can use that as basically a reason. But with the easy form, like throughout this whole process, is very important that you maintain documentation of this, that you don't necessarily have to submit this calculation. With the easy form, you don't have to submit any reduction calculation. So you don't have to submit your salary reduction or your full-time equivalent reductions, but you still need to maintain the documentation just in case you're audited within that 6-year window. So if you're still submitting the easy form, it's imperative that you still have to go through, unfortunately, you still have to go through the exercise of proving it out that you didn't have this stuff. So it's very important to have all this documentation on hand. So the full application. So the biggest thing with the full application, the biggest difference between the easy and the full is that you have to basically disclose your full-time equivalent calculation, how you got there, and if you're using any safe harbors. And same thing, you would disclose that you have no reductions or you have reductions greater than 25% in your covered period. So there's no reductions in employees or average hours paid if you have not reduced the number of employees or average pay period for your employees between January 1st, 2020 and the covered period, like I said before. So there's other safe harbors. So if you were unable to operate during essentially February 15th to your covered pay at the same level of business due to, like I said before, basically federal or state restrictions, that doesn't count against you and your full-time equivalent. Basically, it's a safe harbor, and essentially a safe harbor that says these reductions don't count against you. You would add them back as if they were employed during that period. The second safe harbor is you can bring people back by a certain date. So as long as so if you had reductions during your cover period, and say you go your 24-week period in October, you still have reductions in full-time equivalent employees when you come in October. But you have until the end of the year, as long as you don't file your forgiveness application, to bring those employees back. So you have until December 31st. So if I started out my base period 50, because of the pandemic, I got down to 40, but eventually towards the end of the year, I was able to bring back all those 10 employees to get me back to 50. Then that basically says that's a safe harbor, and your forgiveness doesn't get reduced because you brought your employees back by the end of the year. So once again, I can't stress it enough. Patience in filing the loan forgiveness application is essential because you have to be patient throughout this whole process. So there's some exceptions to when you count your full-time equivalent employees, because essentially these type of changes in full-time equivalent employees don't count against you. So first, if there's a voluntary resignation, so if somebody voluntarily resigns, doesn't want to come back to work, it doesn't count against you. If there's a termination for cause, if there's a reason for why you had to terminate this individual, it doesn't count against you. If there's a refusal to accept restoration or reduction of hours, so if somebody says, no, I don't want to, you put me part-time, I don't want to go back to full-time, does not count against you. If a written request for reduced work schedules, don't count against you. And if you so you need a written offer, you try to rehire or somebody that didn't want to come back and a similar qualified person you couldn't find to fill the position, that doesn't count against you. But it's important in this situation when you try to rehire somebody, you still have to contact the state unemployment agency. And with all this, to document it, you need written documentation of all these. So each of these full-time exceptions that may be applicable to your business, it's imperative that you have written documentation of what you did. Written documentation of voluntary resignation, written documentation that you reached out to the state unemployment agency, say they declined to offer. Same thing. Everything needs to be written and have written requests and should be documented. So this is another thing that when you prepare your calculation, you should have this ready to go. So forgiveness application. So if you have no full-time equivalent safe harbor, if you're unable to meet the full-time safe harbor, you must compare the average full-time equivalents during the cover period to one of the following look-back periods. So you have two look-back periods. You can either look at from February 15th of last year to June 30th of last year of 2019, or you can look at to the first 2 months. Obviously, you want to use a lower number because the lower number of those two periods would be better because it's less that you would have to restore. So you should evaluate, when you prepare your calculation, you should evaluate both periods to make sure you're using the lower starting place. So the actual forgiveness application full-time equivalent calculation. So one full-time equivalent is equal to 40 hours per week. A lot of times I get the question is, what if my full week is 35 hours per week? Do I still count that as a full-time equivalent? So when you go through the machinations of the calculation, it's not going to really matter because you're going to be comparing apples to apples. So if in your base period, your full-time equivalent was 35 hours, then in your cover period, if it's 35 hours, it's still the same. So even if your normal work week is not the full 40 hours, it's not going to really count against you because you're comparing apples to apples. So as long as it's really 40 hours is one full-time equivalent, but when you measure your full-time equivalent, it's important that your base period count is. So if your base period is going to be the same as your cover period, it's not going to really matter. So each employee who worked 40 more hours will full-time equivalent. Each part-time employee will be converted to a full-time equivalent by dividing by hours by 40. So so in my example, will be 35 divided by 40. It's the same thing in your cover period. It gets you to the same place. So there's a simplified method. So there's a simplified method that you count each part-time employees who worked under 40 hours as 0.5, regardless of how many hours they worked. So as part of this, you should do both methods. You can do the actual method where you basically calculate what your true full-time equivalents would be. Basically, you would take their hours divided by 40, or you should compare it to, if you use a simplified method, to whatever gives you the best answer, because ultimately you're going to want to use what gives you the best answer. So it's very important that you do both calculations to evaluate what's the best answer for your business. Average hours worked per week drives the full-time equivalent calculation for the cover period. It's very important to stress that. So another part of the application is the salary and wage reduction. So you have to complete the salary and wage reduction column only for employees whose salaries or hourly wages were reduced by more than 25% during the covered period, alternative covered period as compared to the period from January 1st through March 31st. So this reduction only applies to employees who made under $100,000 or less in 2019. So if somebody was above that threshold of $100,000, you don't have to, if there's the reduction in their pay in the cover period doesn't go against you. It's not part of the calculation. It's just for those individuals who are under that $100,000 threshold when you look back to 2019 and you compare it to your cover period. Based on the average annual salary or hourly wage, not the number of hours worked in the period. So it's based on what the average annual salary is and what the average hourly wage is, not the hour. So it's really their pay rate in terms of when you look at their payroll period. So it appears to be based on base pay, not overtime rates. So you would have to use their base hours. So forgiveness application, payroll costs. So include gross pay per employee for each pay period paid or incurred in the covered period. So it's basically anything paid, anything you pay within that 8-week period gets included. Then you get one additional prorated one outside of the covered period. So basically you get everything. So basically you get, if you use an 8-week period, you can get basically 8 weeks of pay up to $15,385, which is $100,000 annualized over an 8-week period, or the $46,000 figure, which is 24 weeks annualized. So those are the max for employees. Owners have different thresholds, so they're treated separately and they calc separately. There's a different sheet to calc them, but for a standard employee who's not an owner, and they define what they consider an owner employee is. So it's basically anybody that owns more than 5% of the company is treated as an owner. If you're under 5%, you're treated as an employee. So that's something that came out, actually, that came out on August 24th, that they defined what they consider an owner employee in terms of what percentage of the company they own. And once again, if you go sooner than 24 weeks period, our expectation is they're going to make you prorated. So if you want to file your application through 15 weeks, you would do a 15-week proration. So that's why we want full, for the most part, we recommend people going, if they can, go the full 24 weeks before you submit your application. It also, so the payroll cost also includes tips, severances, bonus, commissions paid leave, except for leave covered by the FFCRA. So other payroll costs that we talked about, so employer state and local taxes, retirement plan contributions, employer healthcare costs are not cash compensation or not in addition to gross pay. They don't count towards the per employee cap. So that really, the caps that we talked about, that $15,000 figure and the $46,000 figure, really counts to a cash compensation. These other types of compensation or these other types of employer costs, there's no cap towards that. So a lot of questions we get to, what's included in healthcare costs? So in healthcare costs, it includes employer premiums, includes self-insured plans, medical, dental, and vision. Retirement costs includes employer contributions to defined benefit defined contribution plans. Non-eligible costs so far as life insurance or workman compensation. Disability insurance is a gray area. So just in our nature, we're accountants, we're conservative. So we would recommend that you don't submit that disability insurance, especially if you have enough payroll costs to cover it. We recommend, especially with this, the more black and white things could be with this application, that's what you should do. If there's any gray, we say avoid the gray. If you have enough expenses to fulfill the forgiveness criteria, use those clear-cut expenses. So there's a Schedule A as part of the forgiveness application. So these employees employed during the covered period whose principal place of residence in the U.S. So Table 1's employees who receive compensation from borrower at an annualized rate of less than or equal to $100,000 for pay periods in 2019 and were not employed by a borrower at any point in 2019. Then you have Table 2. So these are the employees who receive compensation from the borrower at an annualized rate of more than $100,000 per pay period in 2019. And so Table 2 is not subject to Table 2 is really not subject to reductions, to that 25 reduction limitation that's there. Then in terms of, you would use IRS regulations to determine if an individual's principal place of residence is outside the United States? Okay, so we went over this. So some non-payroll costs, that's going to be utilities, it's going to be rent, interest and obligations secured by real or personal property. So that's like buildings, equipment, copy machines, those type of stuff. Interest for unsecured loans is not eligible. So if you have an unsecured loan, that interest is not eligible. Costs are paid or incurred in the covered period. It must be paid by the next regular billing cycle. That's what I said. You have it within that covered period. So whatever you pay in that 8 or 24-week period counts. Then you get a prorated portion of the next payment outside of that period. So anything that was essentially incurred within your covered period but was paid after it counts. So lease payments include principal and interest for capital or operating leases in effect prior to February 15, 2020, including equipment, copiers, office space. So there's a couple important updates when it comes to this, that lease has to be in effect as of February 15, 2020. They recently came out with some rules related to basically related party rents. So if you're paying related party rents, you may not be able to include that in forgiveness if it's not backed by debt. So a situation here is I own company A that owns owns an operating company. I own company B that owns real estate. Company A pays rent to company B. So if there's no debt on company B's books, so if there's no basically mortgage on the building, and you're just paying that rent to company B, that rent doesn't qualify for forgiveness. But on the other hand, same situation. If there's a mortgage there, the rent you pay would qualify, but there's certain limitations based on what you pay in terms of interest and principal towards that. So I won't get into the details of that, but if you have basically related party rent, reach out to your professionals, look at the guidance. It's important because it may not be fully eligible for forgiveness, depending on the facts and circumstances around it. So this gets to our last section is how you're going to account for forgiveness, because we've kind of gone through. I've touched upon what you would do with the application, how you're going to deal with the bank when you submit your application for loan forgiveness, in the window around that. I've touched upon some of the tax issues associated with this, but now what are some of the accounting issues? A lot of people have reporting requirements, either to their investors or they have to debt holders or other regulatory reporting requirements they have to fulfill. So right now, how are you going to account for this on your books? Because it's been on your books since April. Are you properly accounting for it? So forgivable loans are a form of government assistance. So U.S. GAAP addresses accounting for government assistance for not-for-profits, but not for for-profit entities. So what's happened is the AICPA has come out with basically accounting alternatives that a company can use to account for the loan. So there's 4 accounting alternatives that you have an option to use. If you're except for not-for-profits, you can use any of these options. So the first one is a debt model. So essentially, you record it as if it was debt. So you record the debt, you would record the associated interest, you would accrue the associated interest throughout the debt. So basically, it sits on your books as debt. Then ultimately, you would recognize the forgiveness of debt income associated with it with when ultimately your loan is forgiven. So ultimately, that's going to be when you get a response back from the SBA say, we approve your loan forgiveness. So at that point in time, you would recognize loan forgiveness at that model. So in most instances, as we sit now, if you don't get an answer back in forgiveness in 2020, you would recognize the income essentially in 2021. Some people don't like that answer. Some people said, well, I want to match it against my expenses. So if that's the case, how can I do that? So there's other models available to you. So the government grant model, basically the first government grant model out of accounting standard ASC 958-605 allows you to account for it basically as a refundable advance. You account for it as a refundable advance until the conditions for forgiveness are met. So say, for instance, you have it, you recorded it on your books, then you meet the forgiveness criteria within your 24 weeks. So basically, you ended your 24 weeks, you do your calculation, and if you were to submit your loan forgiveness application today, you've come to the conclusion that for the most part, I've spent the money in the way it's supposed to be spent. So I have that 60-40 split. I have no reductions because of my full-time equivalents are fine. I had no reductions in salary. You're able to recognize that income in 2020. Same thing with the government grant model. So this other government grant model is actually an IFRS, so International Financial Reporting Standard, which is where the ICPA referred to that. But this allows you the same thing, where it says as long as you have, they use a term of reasonable assurance to us, that would be probable that you would receive forgiveness. You could recognize the income basically once you fulfill that forgiveness criteria. So it would be same thing. At the end of your 24 weeks, you have a 60-40 split in terms of how you use the expenses, 60 for payroll, 40% for non-payroll, and you have no reductions, then you could recognize essentially that income in 2020. The last model is the gain contingency model. So under the gain contingency model, what happens there is basically you don't recognize that forgiveness of debt income until you're granted forgiveness by the SBA. So you would have to wait for an answer. Similar to the debt model, you would have to wait for an answer on forgiveness. So that won't be until you receive full forgiveness. And I think for most individuals, that's going to be 2021. So just to wrap it up, basically, if you're more inclined to recognize forgiveness within this current calendar year, 2020, you want to opt for one of the two government grant models. If to you, you'd rather recognize it in 2021, you think that's a better approach for you, then you should use the debt or gain contingency model. That will really dictate. So there's some flexibility here that in terms of when you recognize it. So that's with things that's, I think it's a positive thing that the ICBA released, that there's some flexibility on how to account for this. So there's a couple things before I get, so there's a couple things. So if businesses have been approved to receive or have already received funds from PPP, what's next? And then questions how you calculate your loan forgiveness. So we've come out with a loan toolkit that's been very comprehensive. I don't know if some of you on the call may have been using it. It's very comprehensive. We've been updating it. Every time there's a new guidance, we update the loan forgiveness toolkit. It's very intuitive. Unfortunately, for everyone, the SBA made the calculation very difficult. So we designed this toolkit to really cover most scenarios. So we welcome you to go to our website, download the loan toolkit. It'll give you a good starting place of how you calculate loan forgiveness. We also have dedicated teams of individuals that really can help with the loan forgiveness. We have dedicated teams that if you need help through the process, just contact us, contact Bloom Shapiro, or you can shoot me an email, give me a call. If you want assistance in the loan forgiveness process, we are giving assistance in terms of helping you fill out the application and to make sure that you're maximizing your loan forgiveness and that you're looking at all your available options. So before I kick it back to Laurie, I'm going to try to do something dangerous. I'm going to try to stop sharing my screen and share another screen, and we're going to see how that goes to show you the website that I think everybody should be visiting every day. So I'm going to see if hopefully this works and you guys can see it. And I think you can see it. If not, somebody please let me know. Or look for a message. So this is the website. If you can see it, it's the CARES Act. So this is the website that they release all the new guidance. So on a daily basis, if you type in CARES Act, you'll see for the borrowers and for the lenders, it gives you all the guidance. So this is all the guidance that they've issued and on the dates they issue the guidance. So you can see for borrowers, this is mostly the application type things. So for the borrowers here, the applications, here's all the versions of the applications, the dates are released. If you're on the lender side, it releases all the lender guidance. So it's been, okay, can you guys see this? Can you see it? Laurie, maybe I can see you on the screen. Maybe you can Unmute and let me know if you can see it.
I see it now. Yes, I do.
Okay.
Why don't you shout out the URL?
You're right. So the URL is going to be home.treasury.gov. And if you go to that homepage, there'll be a link to the CARES Act, and that's what you want to hit, the CARES Act. So in there, you're going to see you go in and you'll see all the issue guidance, and it all comes with dates. So one thing I just want to point out is, for instance, here, you see this frequently asked questions. They updated yesterday. There's not a lot of publicity there. So if I click on it, it'll pop up basically the guidance. And if I go to the very end, you'll see question 52 here was issued basically yesterday. So it's a very fluid situation. More things are constantly being issued. All right, so I just wanted to show everybody that. If you have any questions, I can shoot me an email. I'll send you a link. It should be part of your daily routine when it comes to the PPP loan.
Well, I see. I'm guessing it's part of the excitement of your morning to go to this website and to look at daily guidance, right? Just
yeah. Maybe because I'm an accountant, I like these type of things. Maybe that's what I get excited for. Most probably not.
Like, wow, what did they post today? Okay, so we have a bunch of questions, David, and thank you very much for that tour de force. That was amazing. It was so comprehensive, but naturally, because it's so complex, our folks have a lot of questions. So thank you for your patience and sticking with us. We want to make sure that we get all the questions answered. So this is the Q&A portion. So if anybody still has some additional questions, feel free to forward them to us. So let's get to the first one. Ellen asks, how likely is it that loans less than 150K will be automatically forgiven?
So that's a tough question. There's been various bills in Congress to say it should be automatically forgiven. But with that said, the recent news with all the fraud that's going on with the PPP loan, at this point, I would say it's probably unlikely at this juncture there'll be some sort of reporting there, just because of all the news around there's been a lot of negative press on the fraud associated with the PPP loans. So I think for the most part, there's a bill in Congress to address this, but I doubt it's going to make any movement on that.
Are they kicking around any other dollar amounts? I know you mentioned earlier in your presentation that below a certain threshold.
So the initial 150 was the initial threshold that they said they would forgive. Because they thought when they did a disclosure of who received PPP loans, they basically, if you received up and above 150, they disclosed you. If you didn't, below that. So that's been what's been bantied around, but I don't think there's going to be much traction on that.
Okay. Our next question is from Anne Marie, and she's interested to understand the FTE reduction safe harbor rule number 1.
So if I remember that safe harbor rule number 1 is basically if somebody says, I don't want to come back to work, or you got terminated for cause, basically, it doesn't count against you. So if you had 10 employees and 3 employees refuse to come back to work, so what you would need to do in that instance is you would need to document the reason why they refuse to come back to work, your attempts to get them to come back to work. And if they were on unemployment, you would have to contact, in Rhode Island, your state unemployment agency said, I have a job for this person. They refuse to come back. You have to notify them and maintain that documentation of you notifying them. So with the safe harbor, it's very important in terms of maintaining this documentation of these employees that are impacted by it, that refuse to come back to work, or if you terminate somebody for cause is another reason you can use. So if they did something on the job that warranted them to be terminated, have documentation of that. I can't stress enough that documentation is paramount, regardless of your loan level. It's paramount throughout this whole process.
Okay, thank you, Anne Marie. Our next question is from Paul. I understand that the SBA will have an online portal through the banks to apply for forgiveness.
So that online portal is active. It was active in August. I think I'd be after August 10th. I want to say August 10th because it's my wife's birthday, I think. So that's when it came online. So the SBA, it's open. Banks can submit it to the SBA. I think some banks are waiting. Some banks are accepting forgiveness applications, and they're going through their process and they're submitting it to the SBA. I don't think most banks have heard back on forgiveness or anything, so they can submit it to the SBA. The portal's open. It's been open since August. Some banks are opting not to even submit it yet. They're waiting for the end of the 24-week period. So unfortunately, every bank has a different process that you have to adhere to.
But you were advising folks to wait.
I think there's a lot of reasons to wait. I think there's the big tax question. I think for a lot of people, that's a big question in terms of depending on the size of your loan, say if your loan's $150,000, basically, if you had $150 worth of expense, you're gonna have to add that back as income, essentially. So if you can wait, I would wait. And there's been more favorable guidance. People should learn from the lessons from when the application first came out, where everybody was a mad rush to do it. They probably left money on the table because they were in such a rush. So I can't stress enough patience. If there's no reason for you that you need to apply for forgiveness now, just wait. Just wait, because things could get better.
Mm-hmm. It's also good news for procrastinators, right?
Yeah. You have 10 months to the end of your covered period, so you have plenty of time.
Okay, Irene wants to know, what if you don't spend all of the PPP loan? Can the funds be returned to the bank with no penalties?
Yes, so you can return funds. You have the option to return funds. If you don't spend it all, you can return it with no penalties.
Mm-hmm. What a lucky situation to be in on that one.
But interest still, keep in mind, interest is still accruing on that balance.
Yeah. From the day of disbursement.
From the day of disbursement, yes.
Okay. Our next question is from Dar. So if my 24-week period ends October 15th and I have not put the employees back full time, I have until December 31st to get them back full time? Question?
Yes, you have until December 31st to restore everybody back. So they give you that till the end of the year. It could be a happy new year for a lot of people. So
okay, very good. Next question, I believe Dar had a second one. Yes, we pay twice a month. Does this mean we cannot go the 24 weeks?
You can go the 24 weeks. So in that instance, you can go the 24 weeks. You just can't use the alternative covered period. So basically anything you pay twice a month, anything you paid within your 24-week window would count, and then you would prorate the next one outside of your window. So you can use the full 24 weeks. There's no restrictions on you using that.
Next question is from Diane. With such a long window for forgiveness, what happens with counting PPP money as income on the 2020 tax return?
So unfortunately, based on the IRS guidance, if you were to file your tax return, say you had to file it today, that should be income. Based on their guide, there's things to the contrary. Congress has been very adamant that that wasn't the intent, and there's a bipartisan bill, but there's no movement with that. So unfortunately, I don't have a best answer for it, but as if you were going by the letter of the IRS guidance, that's taxable income to you. So you need to, it's something I know people have estimates they have to make. They have tons of things they have to make based off this figure. So you really need to, it's important that you talk to your professionals throughout this whole process, because there's a lot, unfortunately, there's tons of uncertainty around this. And until after the election, I don't think there's going to be a clear picture. Even after the election, I don't know if we're going to get an answer before the end of the year.
Mm-hmm. Okay. Next from Jane, FTEs could be very skewed with high turnover. Is it acceptable? Is this acceptable? Meaning forgiveness just looks at the definition of an FTE calculation.
So FTE, so you measure your FTE over your period. So you have basically two periods you can look at. So it's a culmination throughout the whole period. So you're right, it could fluctuate up and down, but you would take it during your whole period. So you look at your base period. So your base period is either that period from February 15, 2019 to June 30, 2019, which is a little longer, or you as your base period, or the other alternative base period you can use is the first 2 months of 2020. So basically January, February. Then you compare that to your 24-week window. So it's really your average count within those two periods. So you're right, it could skew it depending on how much turnover is in the period. But keep in mind, one thing that could help you is you have the other safe harbor where you can restore employees up until December 31st. It doesn't necessarily have to, I think one thing to stress is it can be any time up until December 31st. So if you can bring everybody back on November 15th, file your application then, because you're locked into that November 15th date.
So we're fielding questions. David is being gracious enough to go through them one by one. We have at least 3 or 4 more questions. So if you're still listening and you have areas that you want to clarify, please feel free to forward them to us and we'll get them answered to you. Our next question is from Steve. I did a trial filing of the easy form. We had 20 employees at the time of application and 15 FTEs at the time of application. Okay, the form calculated full forgiveness. Why wasn't this reduced?
So basically you have the end of your calculation period is the end of your cover period. So if you're saying your cover period end at the time was 20, it locks you into that 20 figure. So if 2 months down the line, you reduce your employees now to 15, as long as you're matching your cover period, it's fine. It's within that. So you really measure it at the time that you said your cover period went to. And at the end of that cover period, say 2 weeks later after the end of your cover period, if you let people go, it doesn't count against you. So it's really, it looks at what you deem your covered period is. So whatever that 24-week period ends, that's where the window you're looking at. So it was from April to October, some period there. As long as you maintain within that period, you're fine. There's been nothing issued that says if a week later you let go of everybody, there's nothing that says that you can't do that currently.
Okay, Steve, I hope that answered your question. If not, get back with us. Mark wants to know, please explain the tax implications of forgiveness in 2021 versus non-deductible expenses paid in 2020.
So I'm gonna caveat this. Everything's pending additional guidance, but based on the IRS notice that was issued, they're saying this is going to be a 2020 issue in terms of that it's going to be non-deductible for a forgivable loan in 2020, that you would pick up that income in 2020. As things stand now in the IRS position, which can change depending on if Congress makes law, but if things fall now, the non-deductibility would be applicable to 2020 based on what was issued. But things are fluid, it could change. There could be different interpretations of that, so I can stress it. It's important that you review your individual circumstances with your professionals.
Are employer-paid payroll taxes eligible for forgiveness? No one wants to know.
So no. So what's the only employer-paid payroll tax eligible for forgiveness would be state and local ones. So for Rhode Island, it would be like unemployment that you pay or what you pay in TDI there. But no federal, so like your federal FICA and Social Security would not be deductible that you pay. That would not be deductible. It's really the gross wages you pay your employees. It's going to be your health that you pay on their behalf, the employer portion only. Same thing with the retirement plan contribution, the employer portion only, and those state local taxes that you pay at the state level, nothing at the federal level.
Mm-hmm. Okay, another question about whether your PowerPoint deck is going to be made available. And I can say on behalf of the Chamber that we in fact will be distributing your PowerPoint to all the registered attendees, and putting it up on our website. Are there any other particular resources? I know you pointed to tools.
So go to our website, the Bloom Shapiro Lifestyle. We have a dedicated page to COVID-related things, especially PPP. We have a whole dedicated page to PPP where you can download our loan toolkit. It's a very comprehensive toolkit that covers the whole application. It essentially mirrors the application. It helps you do the calculations. By no means, I'm not going to lie to you, say it's a simple Excel worksheet to use, because the application process is not simple. But I think it's a great starting place. It covers a lot of your bases. And if you need help with that, reach out to us. We're helping tons of individuals who are applying for loan forgiveness throughout this whole process. So I think it's important that they reach out. If you want to download it, go to our website. It's there. It's open to everybody. It's available to anybody. There's no cost to it. It's free. It's a great toolkit.
Okay, so we're putting it up on the screen, blumshapiro.com/loan-kit. So, and Bloom is spelled B-L-U-M.
Yeah, with the U. No O.
No double O's. Okay. That is the last question that we have, David. So any concluding remarks that you'd like to make?
Yeah, I think I know this is tough times for everybody. The PPP loan had great intentions. I know everything didn't work out the way people thought it would. I know there's been a lot of confusion throughout the whole process, but it funded people with money they needed at the time. I think throughout this whole process, it's very important to be patient. Be patient. If you don't, I won't 100% tell you not to apply for forgiveness because everybody's situation is different, but make sure that you're talking to your advisors before you go ahead with this process. I think the more people you can collaborate with on this process, the better. You talk to your banker, talk to your accountant, talk to any of your attorneys, talk to everybody that's involved in this process to ultimately make the best decision for your business.
A lot of great comments coming in that I'd love to see. Nicole says, thank you so much, David. Beth says, thank you, GPCC. And David wants. Teresa says, thank you so much. Jennifer says, great job, David. Exclamation point, exclamation point, exclamation point. Happy face.
Yeah. If you have any questions, feel free to reach out. I'm available. You have my contact information. Shoot me an email. Shoot me a phone call. I'll do my best to get back to you. So I'll leave it at that.
Do you want to just say your phone number and your email address once again?
So my email address is dfontes, so that's FONTES @blumshapiro.com. And my phone number, my direct line, I'm going to give it out. It's 401-330-2754.
Okay. Well, thank you so much, David, and thank you everybody for listening to this presentation today. It was very, very widely attended, lots of questions, but you've done an amazing job, David, in trying to break it down and simplify it and show people where they can turn to for help and resources. And also, you're very generous to give out your direct phone and also your email address. So
there that goes.
here it goes. The phone's going to ring any second. All right, so that's all we have for now. We will be back very soon with additional commentary and programming along these lines. So, David, I hope you'll agree to come back if we have other needs in the next couple of weeks as additional guidance is offered. And, you know, certainly if anything comes up in the morning that you're seeing when you sit down and turn your computer on the website.
I'm sure everybody's been inundated with that email blast. Whenever there's new guidance, we shoot out.
Yeah,
really honest with everybody. So.
Okay. All right. Diane says thank you both, and so I think we answered everybody's questions. With that, we'll say goodbye and have a great day, everybody. Take care.